Ladies and gentlemen, good day and welcome to Apex Ecotech Limited H2 FY25 earnings conference call hosted by AKMIL Strategic Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajdeep from AKMIL Strategic Advisors. Thank you and over to you, sir.
Hi, good morning everyone and thank you. On behalf of AKMIL Strategic Advisors, I welcome you all for the conference call of Apex Ecotech Limited. From the management side, we have with us Mr. Anuj Dosanjh, Chairman and Managing Director, Mr. Rakesh Kaur, CFO, Mr. Ajay Raina, Executive Director, Ms. Kirti Jain, CS, Mr. Jasmeet Singh, Representative of Statutory Auditor, Mr. Maninder Singh, Internal Auditor. Now, I would like to hand over the call to Mr. Anuj Dosanjh. Over to you, sir.
Thanks. Hello, everyone. A very good morning to all of you. Thank you for spending time and joining us on this today's earnings call. It's a pleasure to connect with all of you as we share and reflect on Apex Ecotech Limited financial and operational achievements for the second half and the full financial year ended FY25. Apex Ecotech was established with a vision to address one of the most critical challenges of our times, sustainable water management. Over the past 15 years, we have grown into one of the leading providers of turnkey water and wastewater treatment solutions, driven by innovation, technical expertise, and a steadfast commitment to environmental stewardship. Today, we are proud to have delivered more than 250 projects across 14 industries, treating over 145 million liters per day of water and wastewater. Our in-house capabilities allow us to design and implement highly specialized solutions, including zero liquid discharge, using advanced technologies like NBR, electrodialysis systems, etc. We operate in a niche yet expanding market where demand for sustainable and compliant water solutions is accelerating due to increased industrialization, water scarcity, and regulatory enforcement. Our business model is structured to address these needs efficiently and profitably. Against the backdrop, FY25 has been a year of notable and meaningful progress for Apex Ecotech. I would like to highlight some of the results on H2 FY25. In the second half of FY25, Apex Ecotech delivered a strong financial performance marked by significant sequential growth. The revenue for H2 stood at 4925.44 lakhs, reflecting a robust increase of 126.97% over H1 FY25. EBITDA rose sharply to 897.78 lakhs, up 331.85%, showcasing strong operating leverage and improved project margins. Profit after tax surged to 700.83 lakhs, a 351.42% increase over the previous year. While earnings per share EPS for the period reached 6.31, registering a growth of 294.38. For the full year FY25, Apex Ecotech recorded a revenue of 7095.53 lakhs, representing a year-on-year growth of 33.67%. EBITDA stood at 1105.67 lakhs, up 24.5% year-on-year, while PAT rose to 856.08 lakhs, marking a 29.11% increase over FY24. EPS for the year was 7.91, up from 6.88 in the previous fiscal, reflecting the company's consistent execution and strong operational footing throughout the year. These financial results reflect consistent execution, improved project mix, and the scalability of our operations. Importantly, our balance sheet remains healthy with significant improvement in cash position and term ratios. FY25 was a year of significant strategic and operational advancement for Apex Ecotech Limited. We successfully expanded our international presence, executing projects and developing a robust pipeline in Bangladesh and Vietnam. Our strategic alliance with the global technology leader Veolia has further deepened and enhanced our access to cutting-edge technologies and global best practices. Further, our in-house engineering teams developed and deployed advanced technologies, easy electrocoagulation systems, etc., enabling efficient treatment of complex industrial effluents. Additionally, we continue to invest in automation, digital project monitoring, and after-sales services, along with in-house system upgradation to improve customer experience, project efficiency, and long-term operational visibility. Now, coming to the outlook for future, we are looking ahead to FY26. We remain firmly focused on delivering long-term sustainable value. Our key strategic priorities, including scaling high margins, verticals such as zero liquid discharge, membrane bioreactor systems, RO recycling, and implementing newer technologies, thus reducing CapEx, OpEx, total area, resulting in improved overall treated parameters and efficiency. Further expanding our after-sales and maintenance services to create a steady annuity revenue stream and strengthening our presence in both domestic and international markets. With the order book exceeding 55 crores in the beginning of FY25-26, we are well positioned to accelerate execution, improve scale, and drive consistent growth. We are confident that our technology-led solutions, strong in-house capabilities, and sustainability-centric business model will enable us to capture the expanding opportunities in the water and wastewater treatment sector. I would like to take this opportunity to thank our dedicated team, trusted partners, and value-added shareholders for their unwavering support. The road ahead holds immense promise, and we remain committed to driving excellence, innovation, and responsible growth. With that, I now open the floor to your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Thank you very much for the opportunity, sir, and congratulations on excellent set of numbers. We interacted during the IPO, just before the IPO, and I'm pleasantly surprised at the execution in the second half, sir. So congratulations, sir. Sir, having said that, there were two line items which caught my eye, and they were showing a little bit of spike. One was on the receivable side. So if you can dwell upon what was the reason why the receivables spiked up? Is this a temporary and transient issue because of probably late billing during the half year and especially during March? And we expect this to get resolved over a period of time, or is this the new level of receivable days which we should build in our expectations going forward?
Yes. So, see what happens here, I think your question rightly stated. The increase in volumes in the second half was quite appreciable in the sense that from 21 we...
Sorry to interrupt. Mr. Anuj, sir, can you please come closer to the mic and speak?
Clearer?
No, sir, the voice is muffled.
Okay.
It's also breaking up. Your voice is breaking up now.
Anuj, sir, we are unable to hear you. The voice is breaking up.
That's one. Is it better now?
Yes, sir.
Much better, sir.
Okay. So I have moved out from the cabin. Maybe there is some problem with the disturbance. But now, if I'm audible, I just wanted to mention that see that the answer actually lies in the question yourself, as you have stated. You know, there has been a jump from 21 to almost 50 CR, which is equivalent to our last year, revenue business, almost equivalent to that. So yes, there was a lot of, billing or invoicing during these 6 months, specifically in the month of February and March. And therefore the receivables were high. But however, I mean, we are trying to even out in such a way that it does not get into spikes, but being a project-oriented company, the spikes are natural and will come during the course of time. This is only a snapshot. So maybe the next year, at the end of the next year, it may or may not show.
Understood, sir. Understood. Otherwise, sir, what would be your, on an average, receivable days? The collection period is what, sir? 2 months?
Yeah, it generally holds to that because most of the companies that we are working with are, MNCs or established or companies of repute. So generally, when we invoice the material, by the time it reaches their site, there is a GRN activity which goes on another 40 to 45 days for the payments to get released. So typically speaking, it ranges between 45 to 60 days. This is for the
Understood,
supply
sir.
part. The erection part, then the milestones, keep on changing because there is an activity-oriented milestone.
Understood, sir. Sir, my second question is on the revenue growth that we expect for next year. So you said that we have a opening order book this year of 55 crores. So generally, again, for project-specific companies, we are seeing that order book is generally multiples of the trailing revenue. But I understand our business model is different, our offerings are different. How should we look at the significance of this 55 crores? So can you give a comparable number for last year? And can you also tell us the opportunities which you are seeing going forward? What kind of orders are out there for which we'll be bidding? And how do you see the overall flow of orders? Is there any pickup in activity or, would you like to point out anything specific related to the activity levels?
Yeah, thanks for the question. I would like to answer it in twofold way. Going back a little bit, from the COVID days when everything was coming to a standstill and then restarting everything. So the activity of water and wastewater treatment actually picked up, 3 to 4 years back once again.
Right.
And then what happened was that we slowly built up the order book. So I wouldn't actually know what exactly was the last year's, spillover, but definitely it had to be much lesser than this year. So every year we are growing in terms of the spillover. We had a order book of 119 odd crores last year, out of which 55 has come this year. And then our overall project gestation period ranges from 6 months to 10 months. So therefore, unlike the municipal and civil jobs, which generally take 2 to 3 years, where your order book could give a very different kind of an outlook, having the first year having a much larger number and then, it getting executed into different years.
Right.
However, ours is mostly all these 55 will get executed within this year. Further, whatever orders we pick up to, I think almost till September or October will get supplied within the same financial year. So the numbers are a little different, but what is heartening to mention is that we have a much better and steadier order book to comply with in the first 6 months, rather than we had a different, a little more skewed revenue percentage earlier.
Understood. So this is sufficient enough, sir, for, let's say, a 25% growth or last year you did 34%. If I just look at the operating revenues, can you replicate that growth with this order book? Again, the significance is kind of lost to us as of now because you are a new company and we're just getting this number.
No, we are very much on. And I think this percentage is, as a company, is the least what we are thinking at the moment.
Understood, sir.
And
sir,
we have like
questions.
Sorry. Okay. Yeah.
So please finish your point, sir. No, sir, please finish your point, sir.
No, my point was that since we are now, well placed in couple of orders which are, going to be placed in the next 2 to 3 months. And having, booked last year, the order through L&T, the Kyoto order, which was almost equivalent to 40 CR. So our ticket size is also increased. So this year, we definitely would be looking at bigger jobs and we will be in the fray for, higher volumes, which will continue in the subsequent years also. So we are in the position to now upscale ourselves, and which was part of your question also. So I thought I'll respond to that. And also we are bringing in furthermore technologies. Last week we were in Kuala Lumpur, where we again received an award for innovation. And we are now tying up with some European companies to bring in more technologies in India, which are very new to India, but highly efficient and more beneficial to the user at the end of the day.
Understood, sir.
So
I have a few other
it
questions,
looks
but I'll
very
go
good.
back in the queue.
Yeah. Sure.
Okay, sir. Great, sir. I'll go back in the queue, sir. I'll give others opportunity. I'll come back with few other questions, sir. Thank you very much, sir.
Sure. Thanks.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Rahil Dasani from MAPL. Please go ahead.
Yeah, hi.
Good morning.
Good morning, sir. I had a few questions. First of all, I can see the shift in our margin from the first half to the second half. So if you can explain what changed for us.
There is a slight echo in your voice. If you can repeat.
Now can you hear
It's better, yeah.
Hear me better now?
Yeah. Yeah.
So we can see a shift in margins from the first half to the second half. So if you can explain what changed for us.
Nothing exactly changed. It is just that, we had jobs which had their completion period or supply period according to what was given. So generally at the end of the year, there is or end of any quarter as such, there is a higher amount of invoicing which is done by the supplier and also well appreciated and accepted by the receiver, the user. So, like I said, last year we had 21 crores of execution. This year with having 55 in hand. So we are expecting a much better, H1, and it will not be as skewed as earlier. So it is beneficial in terms of maintaining your cash flows and avoiding spikes also.
So if I understand it right, you explained that in H2 there were a lot more project completions and that's why our margins spiked a bit.
Correct, because it was more like project oriented and so the first 6 months the number of projects to be executed were lesser and it was the later half of the year it was higher. But our endeavor was that we have a kind of, if not a steady monthly kind of a invoicing, we have at least, there are lesser of troughs and, crusts so that there are not too many spikes. So this year will be far better.
So if you can maybe explain in this March number of the 55 crore sales that we did, how much was from project completion versus the milestone payments?
No, can you come again, please?
In this 50 crore sales that we have achieved.
Can you use your handset, please?
Can you hear me now?
Sir, the voice is echoing a bit.
Sorry, I'll just check it out. Yeah. So my question is, in H2 of the 50 crores of sales, how much was the project completion sales versus the milestone payment sales?
See, I'll put it differently because if I understand your question properly, what happens is, for any job for us to comply with, I'll give an example. If there is 100% of the job which has to be done, around 80 to 90% is against supplies. So the payment and invoicing is on pro rata basis against supplies, and 10% to 20% varies for erection and commissioning. So typically, for any job, whether irrespective of the volume, whether it is 30 crores, the percentage typically remains the same. So plus minus 2-3% here or there, generally the numbers are the same. So you can extrapolate that.
So I'll connect with you privately about this question.
Sure.
My next question is, how do the margins change in the WTP projects versus the WWTP projects versus the ZLD projects?
See, ZLD being a little more niche and it depends because, see, a lot of companies are vying for it. One is you have an in-house control over how you execute the job. But I strongly feel the technology is there to actually get a better result in terms of margins. So the objective is if we are I'll give you an example. If suppose something is to be done in 100 meters square and we can do it in say 10 meters square. So the advantage lies in terms of the overall expense to the client, and that is where we can make better margin. So I think ZLD obviously holds better chances of having a better margin at the end of the day. Because it's technology oriented.
Yeah. So going ahead, is our focus going to go more towards the ZLD projects? And right now, I believe it's close to 20 to 30% of our revenues.
Definitely. See, ZLD actually is the name of the game, and that is what's going to change everything, or that's what is the need of the hour. Because finally, at the end of the day, you can recycle water, but once you're recycling water, the reject which is going into the downstream or which is getting disposed is full of contamination. So that's not the objective. The objective is to actually not to contaminate or pollute the environment. That's one. Reuse the total water, and with the evaporation coming into the being, so where you can recover as 98, almost 98% of water. So yes, that's the name of the game, and we are focused on that.
I understood. That's interesting. Sir, another thing you mentioned was that the execution timeline for our projects is much lower compared to the municipal projects, which range from 18 to 24 months, compared to 6 to 10 months for us. So, I believe both these applications need treatment plants at the end of the day. So is it like it's the sheer size of the projects because of which our timeline is lower, or what is the reason?
Both. See, one is the ticket size, and the second is our projects are more oriented to MEP, mechanical, electrical, and plumbing, basically, like to say. Whereas if you go to any municipal jobs, they are more civil oriented. So typically, a civil takes a larger period of time because of so many vagaries. It could be because of the seasonal changes. It could be because of the project size by itself. So our ticket size is smaller, and it is more to do with the like I said, the MEP stuff. So that is the reason, one of the primary reasons that the gestation period is lower.
Understood. And sir, I have a last question. So the customer list you have mentioned, they have several vendors. So why should customers go for it, and why should our order book scale? Because at the end of the day, the demand is limited, and there are multiple players doing the same thing without any differentiation as such. So if you can explain why should we then, and you were speaking a bit about the technology part only, and you have some tie-ups, I believe, with Veolia, few points. So if you can speak on those, and how are we benefiting out of that?
Generally speaking, I would like to, differ a little bit that what you stated. There's a lot of differentiation, and most of this business, one is there is abundance of business in terms of requirement. So there is no shortage of demand as such, because there is an increasing requirement of recycling water and, putting ZLD plants, which is slowly going to grow. It's in single digit percentages as of now in India. So the scope is huge for the next couple of decades, and probably for the rest of anybody's and everybody's lifetime. However, the differentiation comes because, you have different customers. That is the asset class or the customer class. Some would go for something which is not so expensive, but may not be reliable enough. And it is for us to position to potentially, so there is enough for everybody, but we have to position the product and the system in such a way so that it becomes performance oriented. And that is why if you see our clientele is, I would like to mention that it is quite the upmarket clientele, which understands the importance of this. So today we are buying with some of the big listed companies in India, and we are getting orders against them. So I think with Veolia, because they have certain products, which one of the examples which I gave was 100 meter square versus 10 meter square. Some of these technologies are very well appreciated by the people, and most of these orders from the higher ups, they come from word of mouth. So you do a good job, there are 10 people looking at that job and they are looking at you. So yes, I would like to say that differentiation is on. People do understand and appreciate what we are doing in the market today.
Okay, so what is our nature of relationship with these technology partners, and is it like for example, what you said, that 10 square meters compared to the 100 square meters, is it like no one else is able to provide that particular range in India, excluding us?
No, it's not like that. See, we don't have any exclusive ties with anybody because that they defeats the basic essence of what we are doing. We are finally integrators, and all the knowledge and the mindset towards designing a plant is in-house. So we would not like to stick to any particular company. However, if that company also sees potential in the growth of the system, and these systems do not come easy. I mean, you cannot learn these systems in 6 months and start implementing in the market. You need years of understanding and knowledge to implement product into technologies, because a product may be very good, but if it is implemented in the wrong way, the system will not work efficiently. So that benefit is with us, that we understand, and that is why it is not that anybody else cannot buy this. But can anybody else use it effectively is a question mark.
Understood, sir. It was very useful. Thank you for answering all my questions. I'll get back in the queue. Thank you.
Thanks, Siddharth. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Yash Modi from Ashika Group. Please go ahead.
Good afternoon, sir, and congratulations.
Hello, Yash.
Good afternoon.
Yeah.
Hello.
Thanks. Yeah.
So my first question was, in this order book that we have executed this year and the opening order book that we have, as a principle, do we have any government orders, or we don't apply for any government orders at all? Don't we bid?
See, we have, as a principally, we had earlier not decided to do any of these things, not to get into the government orders. However, there is a shift in our policy that we want to start with some lower ticket size, because one of the reasons not going into infra and government orders was the scale of civil works was very high, whereas the scale of technology was low, unless, these are very, very big plants. So we wanted to build it up slowly. Now we have switched into couple of jobs which are more towards power sector. So government power sector, where technology is appreciated. I mean, we are not a civil company as of now. So that is the reason we had not gone for it earlier. But there is a slight movement towards the government jobs now.
Got it, sir. And say, sir, typically, when we were said to get this L&T order or say luminous order you had announced during the quarter, who would typically we be competing with for getting these orders?
See, we have all kind of players. You can divide into majorly 3 or 4 segments. There are some companies which are pan-India, some which are sector-wise, and some which are region-wise. So generally, it is a mix of companies. You have 1 or 2 all-India companies, like maybe Thermax, Ion Exchange, or Concord, or anybody. And then you have sector-wise. So Luminous being a battery company, so we had a membrane and another company I don't recall at the moment. And then you have region-wise. So the unit is coming, say, suppose in Odisha. So you will have a different player over there. So some of these players may not be as good, but, they definitely work in getting a better price for the customer.
Got it, sir. And since this is the first call that we are hosting, obviously you had given a background about you and your team during the IPO roadshows, but it would help for the larger audience if you could let us know about the team, the second line of leadership post you, and what is your background and all for everybody's interest.
So we'll do that. Actually, I am also new at this, so probably all these things which you will tell me, I will, take it effectively and ensure that next time, it's there.
Sure. All the best. Thank you.
Yes, thank you.
Thank you. The next question is from the line of Ankur Gulati from Genuity Capital. Please go ahead.
Thank you. So just one question of the receivables as of March 25. If you can help us, how much money have we received from clients out of the total receivables till, let's say, mid of May or as of yesterday?
See, we have, almost, I would say in percentages, maybe 30% we have received, and in the coming week, one of the larger payments was from L&T, which was to the tune of almost 8 crore. That should be coming next week. So we are very much on track for that.
So the standard receivable days, 45 days from the completion?
45 to 60 days. There are milestone based, like I said, if you supply, your invoicing will be, say, 100 rupees, out of which you are actually what is due is 80 rupees only. So 20 becomes something which will come only after erection or after commissioning. So that is something that will always, be retained for for a longer period of time.
Okay, so out of 100
if we say
retention is only on 20%. Out of 100
10 to 20% it varies. Yes.
Retention is on 20% or retention is 20%, sir?
No, retention is 20%. So, I mean, if it is 80 rupees towards supplies, 10 rupees towards erection, and 10 rupees towards commissioning. So, if I make a supply in the month of March, I am only, what is due to me is 80 rupees plus the GST.
Okay.
And the 10 rupees will come after 3 to 4 months. It will be due after 3 to 4 months because the erection activity will take that much time. However, as far as the billing is concerned or invoicing is concerned, this will remain as an, payment which is due, but not actually receivable. This will only get receivable after 3 to 4 months. And subsequently, it will take another 2 to 3 months for the commissioning, where we'll have to give the PBG to receive our money. So this 20%, 10 to 20% keeps on accruing over a period of time.
Yeah, that's fine. But you guys get to do bill discounting for this 20% or not really?
No, you do tend to get bill discounting, but we are still not availing that facility because we anyway have the available resources as of today. But tomorrow, if required, we will be doing that.
And sir, of the revenues booked in financial year 25 or H2, is there any unbilled revenue?
No, not really. See, most of these unbilled revenues, if I would like to mention, is that the erection work which has been done to a very large extent. However, we have still not invoiced it. So, in a way, that is an unbilled revenue, but we don't take it that into consideration.
That's helpful, sir. Okay.
Thanks
a lot.
Thanks.
Bye.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
So thank you very much for allowing me the follow-up. So again, going back to the revenue growth and the order book, so you mentioned that any order that you win by September will get executed this year. I was just wondering at what stage of the main project do you get involved? Has the main project reached a particular milestone? I mean, is it towards the start of the project or towards the end of the project? When are your services needed?
See, we are there from
this short tenure. Why the duration is short tenure? Yeah.
Let me try to give you the whole, flow chart of this briefly. See, we are involved from day one in the sense it's more like a consultative sale. So there are different companies who pitch in different schemes to the customer, and the customer goes in for a scheme. So if it is any scheme like chosen our scheme, so generally what happens is we give all the drawings, the hydraulic, the P&I, the design parameters, everything, and the civil GA. So now the next 3 to 4 months is for the customer to construct the civil works, which are not the same in magnitude with any municipal plant, but it still requires, like you need a collection tank, you need a sludge holding tank, you need different kind of small reservoirs ranging from 100 KL to maybe 500 or 1000 KL. So that takes around 4 to 5 months. That is the weather aligned. So that's the general period. Approximately 6 months are required. Now till that time we have to give the supplies. So we make the supplies during that time. When I said September means we have 6 months, and that is where the supplies will take place. The project execution per se will not take place. The supply execution will take place. And thereafter, like I just explained to Mr. Gulati, that there is another 6 months which goes for erection and commissioning.
Understood, sir. Understood. So you mentioned that the going forward, first of all, the scope of the projects that you are undertaking, those will be larger. individual ticket sizes will also be larger, and the percentage of ZLD contribution to your revenues will also increase. So all these three seem to be margin accretive. But we are also a small company which is now growing rapidly, so our fixed cost will also increase. So how will these two factors interplay, and what can we expect on the margin side?
See, one thing is very clear to me. As a promoter, I don't want to spread thin so that we lose track of the quality and the commitment which we make to anybody, whether it is our end user or our investor. So, we are not the kind of guys who will, blow trumpets without actually performing. So, in-house wise, we are also implementing a lot of automation and SAP systems into our company so that we are geared up to take, things into consideration with times to come. So your fixed cost, I understand, will increase, and what I'm trying to do is I'm trying to make that the numbers bigger in the sense that we would definitely need some kind of finances over a period of time. However, the same can be procrastinated by having a more efficient in-house system and having better cash flows within the system itself. So that is what we are working on.
So these investments, do you need to do more of these in your balance sheet or through your P&L? I mean, I'm pretty sure employee base has to increase, so that goes through the P&L. But then there are other investment in technologies and fixed assets and probably even working capital which happens to balance sheet. So again, sir, where will the capital be deployed and how will we see it?
Going back to our IPO.
Your employee base, sir, ended at 6.5 crores for this year. Now, let's suppose for the next 100% growth in whatever number of years that happens, how much more employees do you need? And what's a comfortable level for you?
See, there are two aspects again to this. It's more of a hypothetical figure which I'll be probably throwing. But I, as a person, and we as a management do not believe in incrementing or having an incremental increase in manpower with respect to the turnover. So, the other thing is we do intend to give ESOPs to our people, which I had also mentioned during the IPO time. But further, I would like to just go back to the IPO times also. The retardation or the delay in growth from the earlier years was typically because of our capacity to provide collaterals to the banks and wherein we needed bank guarantees. Because they are very important rather than the, direct capital, working capital. But I'm not saying to put direct working capital is not important. But what I'm saying is that bank guarantees help a lot in the sense all the customers which we are dealing with, most of them work on secured advances. So whether we give the material and then we get the payment or we give the advances where we have to submit the PGs or the PBGs. So most of our deployed capital is towards bank guarantee, non-fund based limits. And balance we have been able to manage even from our earlier years of having a strong control over our cash flows and getting our payments from the customer, on time and pushing them to make payments. And also, importantly, executing jobs on time so that, there is no reason for the customer not to pay.
Right.
So I would say that if I have to increase the manpower, if there is 100% growth, I don't feel there should be much increase in the per se the manpower, but it will be in line with the industry trend or probably better. That is the objective. I want to have increased productivity per person of the company.
Understood, sir. Understood. So one final question from my side, sir. Is there any technology or any capability that you are missing where you would like to invest sooner or later? You will have to invest sooner or later. Any big ticket investment that we are going to do, or probably are you looking at any acquisitions just to improve your capabilities?
We are talking to one or two people for getting into industrial sector. Like, for example, we are not prevalent in textiles. we're not there in paper. Like, so earlier, like I mentioned, there are the competition or the players are one of the areas is where they are involved sector-wise. So we are talking to one or two guys, but typically, see, water is also evolving. The technologies are evolving at a very fast pace globally. So what we feel is that it is important at this time to be a little more diligent to find the right clients, and it has paid us earlier while choosing our clientele and who at least appreciate what we are doing, which at a later date will help us scale us the business to quite an extent. So earlier we were doing something which has helped us do this. I feel the next year is also going to be extremely buoyant, and so are the subsequent years. But yes, we are talking. I don't know how fruitful it would be, but then we are definitely pitching for certain things like that. But not in terms of technology at the moment, because we find that there are a lot of global players who have some amazing technologies which are still not there in India, and India needs it badly.
Understood, sir. So thank you very much for giving me the opportunity. So I have one request, if at all possible. So I should also thank you for doing the con call, sir. That's really appreciated. So if possible, kindly consider coming out with quarterly updates, if not proper results. 6 months is too large a gap, sir. And especially if next year H1 is going to be better than last year's H1, and the skew is going to be significantly, I mean, skew is not going to be there between H1 and H2. So kindly do consider giving quarterly updates.
Can I just add to what you said? Can I just add to what you said? You know, I was, if you see, we have only been into the market, the proceeds have come only in the month of December. And there is only one quarter we actually had the funds with us to perform or to utilize.
Sir. I know, sir. Yes, sir.
So, and we are due to certain compliances, but as a management, we are extremely careful and want to meet all the compliances. The only thing I was told was that once you get into the quarterly mode, you need to maintain it. So I didn't want to go awry, but definitely that is on our anvil, and we'll be, if not this quarter, I can't promise it, but definitely from subsequent quarters we'll be doing it.
It's a request that I'm making to all the SME companies, the quality SME companies, because there is, because of a number of actions by the SEBI itself, they have created a lot of doubts by introducing SMA and PCAS and all these nonsense. They have created doubt in the mind of the investors in the market about SME companies. And then SME companies have this 6-month window where there is absolutely no communication because people are just following what SEBI is saying. It's a bad idea. It's a really bad idea to allow people to have 6 months between reporting. Because in that 6 months, it's just vacuum, right? There's no information from vast majority of SME companies. And then it leads to more rumor mongering and more doubts, and like there are no explanations. 90% of the companies are not even doing con calls. People do not do even press releases. That's why it's a good practice, sir. You need not come out with proper results, but just a one-pager, sir. You have excellent communication skills. I'm pretty sure if you write down all the developments during the quarter in terms of what was the inflow, what was the execution, what were the margins. Now, receivables have spiked up this time, and you have clarified clearly that basically with this 8 crores coming in, everything broadly will be resolved. So whatever is the progress on the receivable side. So this will all address all, like, any and all doubts. Plus, you will come across as a very professional company, which I know that you are. But SEBI reasons, I don't know why they have introduced so many like idiotic rules regarding SMEs. It's just making things tough. But anyway, sir, I really appreciate the performance and the con call and the commentary that you have given, sir. Thank you very much for patiently answering all the questions. So all the best, sir.
Thank you, and point well taken. One thing I assure you of is that we are always available. We are committed to certain things, SEBI or no SEBI. Because as a management, again, we strongly feel and believe in people. So we'll definitely be commuting in some form or the other of our performance in the quarterly.
1 page and 1 paragraph is more than sufficient, sir. More than sufficient. You need not waste too much time of yours.
Even the
one paragraph is more than enough.
I will tell you, see, like I said, we are in the process of learning. So the moment as our advisors, AKMIL advisors, pitched in the fact that you should do an earning call, we jumped over the idea because, we are also new. So we, like I said, we want to be as transparent and as open to people who are, believing in us. So, I mean, it goes without saying. Just don't want to get caught up for something, like you said, something which is more like a, it's like shackles. So, I mean, I'm just saying that once we get into it, because we'll have to bring everybody on board, the auditors, everybody has to be involved a little more. I'm not denying anything.
आप results पे मत जाइए, just one page, like one paragraph summary, just qualitative summary, not numbers, not nothing, just qualitative summary. You need not involve the auditors because I know for a smaller company it's a lot of hassle. Just one page summary that this happened during the quarter. This is what the rough revenue estimate is, subject to change post audits. This is what we saw in terms of profitability, and this is what the outlook is in terms of new orders. We are positive with respect to the prospect of the company, or there are certain problems, whatever be the commentary. Whatever you see.
अगर कुछ जरूरत पड़ी आपसे हेल्प ले लेंगे.
Sir, बिल्कुल sir, and you will not need it, sir. Half a paragraph, and sir, everyone in the market will appreciate it. Thank you very much, sir. Thank you for giving me the time, sir, and your kind consideration. All the best, sir.
Thanks very much. Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Soham from RV Investments. Please go ahead.
Thank you, sir. Am I audible?
Yes, very much.
Sir, what was the order inflow in half 2 of FY25? New order inflow.
See, by the time we came with the IPO, that the first quarter was over, and I think those details are already mentioned in the RHP. Post that, I'll have to work out those figures exactly because I'm really not ready for it. But we posted whatever came to us. We got some few more orders, and I've already given those details. But if you want something specific, you can always write to our advisors, AKMIL advisor, and surely our team will get back to you on this.
Okay, sir. And we are expecting like we can execute orders till whatever orders we get till September. So what geography and what sectors we are seeing these orders from in FY26?
See, like I said, there is still of 55 crores, so we are expecting anyway to do those, if not 55, approximately, closer numbers because this is what is it with us in hand. So this will be easier to execute because this is all in pipeline. So I can't spell out the exact number, but then yes, this is very much there, these, because they have to get executed as per the gestation period itself. The sectors which we are talking about is, sorry?
No, sir, you continue.
Yeah, the sectors which we are talking about, it's all around, because the Luminous is a battery company and it's a big company. Also one of our objectives is to work with companies who have multiple factories, because, if you perform well in one factory, your pitch to the next job becomes so much more easier. So the inquiries are from all the sectors which we are working today, and in fact there are from chemical and pharmaceutical, there is from food industry, there is a lot of beverage plants which are coming up in India because of the cola war. There is a lot of we have got inquiries from, I'm saying inquiries which are getting culminated very fast, and the next max 2 to 3 months. So, there are, and then we have white goods, we have, opticals. So, the range is quite wide. So, definitely, like I said, we are still not there in textile and pulp, paper and pulp. Barring that, we are quite well entrenched in most of the sectors. Almost 14 sectors we are, at the moment, we are working on.
So, sir, currently from which sector we have more orders, and like on the ticket size we are like targeting high ticket size. So what is, if you can quantify that, high ticket size means from which sector?
The automobile is big. When ticket size generally goes bigger because of the company. Every company has a smaller, if you go for a smaller company, it will have a smaller ticket size. If you go for a bigger company going into technology. So, I can't pinpoint that this is there, but at the moment, yes, it is automobile for us because we are doing 40 crores with Toyota. The upcoming jobs are, like I said, spread across every job, and these ticket sizes are ranging from anything from 15 to 30 crores each job. So, I mean, there are 6, 7 of them which we are buying for. Let's see what comes to our share.
Okay, sir. So, and like, sir, I asked on the H2 numbers because like we started FY26 with a 120 crore order book, like, and our total year revenue is like 70 crores. So, sir, I need to understand that, like, was there any inflow in the year?
See, every year has a spillover. So we were working on a spillover from the last year. Last year our turnover was 53 and there was a spillover, which I do not recall at the moment what was the number, but so 120 plus that spillover, suppose let's say 140 or whatever, out of which 55 is the spillover for this year, and we add another few orders which have come to this fiscal year. So it all adds up. The math is very clear, I guess.
Okay, sir. And sir, so our gestation period, I should take like 6 to 10 months, right? Project.
Yeah, depending, generally, I mean, saying on an average.
Thank you, sir. That was it.
Thanks very much. Thanks.
The next question is from the line of Rahil Dasani from MAPL. Please go ahead.
Yeah, thank you for the opportunity again, sir. I wanted to understand how do we get orders and tenders? Is it like these private entities also come out with tenders, or is it like they directly communicate with us? How does it work?
Yeah, main strength is word of mouth. So like I said, if I pick up one job of Luminous and they have 14 factories or 13 factories, so we are already prevalent. If we pick up a job from Ecotech, they have some 10 factories. If we pick up a job from Mahindra, they have some 17 factories. So I mean, we are being smart enough in terms of doing that. One is, the other thing is, we are associated with a lot of consultants like TCS, like all the bigger ones. We are doing 3, 4 of them, like Nexer. So each sector has a specific consultant which also helps us. And the other revenue which we get is from our channel, not our technology partners. So whether it could be from Veolia itself or from anybody else, who can, be pushing us into a particular job. So I think at the moment in those terms, and we have these avenues basically. Generally, private companies don't take out tenders, but definitely they are, because everybody has a different approach to treating, the effluents. And the basic scheme may be the same, overall, but then the technologies involved are different.
Okay. So that's interesting to hear, sir, that our technology partners are also recommending us. So, sir, then how should we quantify the bid pipeline for us as to what sort of order wins can we expect for next year? What sort of demand are we seeing from our potential and existing customers? How can we quantify that in some way?
Like I said, it's difficult to spell out a number, but what we are looking at is the growth rate which we have achieved the last couple of years. We at least want to maintain that. Hopefully, outperform that.
Understood. Okay. And sir, secondly, H1 and H2 split for this year was H2 heavy. So is it like it will always be like this, and hence the margins will also move like it did in this particular year?
One of our very, very strong endeavor is that if we have a decent spillover and an incremental spillover, it will avoid the restaurant drops like I was mentioning. So there is like 30-70 ratio. We are trying to bring it closer so that we have a steadier turnover throughout the year. But then it is totally dependent also on the kind of order and the kind of requirement. So, generally, we don't want to make it so skewed.
Understood. So I guess we should see it more as a year-on-year game in the near term at least.
Exactly. We're trying to work on that, and we are trying to see that we get the jobs in tandem with whatever our thought process is.
Understood. And so just my last question on the receivables part, like we see that this number is spiked, and like you explained that it was because of since we sold at 7 March. So I believe till now, it being some 45 to 50 days post execution, we would have received that amount back, right? And now our balance sheet will be much lighter already.
Oh, yes. I mean, otherwise we'll be in trouble. I don't want to be in trouble. And then that is the reason we are working with some very, very, honorable, reputed, established companies. We are not working with any company. So, that's a big, you lose or you tend to, the payments get delayed. So we are, and we follow the MSME principle of getting our payments, and we, keep on reminding customers for the same. So yes, it will be lighter for some time, but then it could become heavier with the new orders coming in.
Understood. So that would be all for me. Thank you very much for spending so much time. Thank you.
Thanks, Utan. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Vinod Gupta, an individual investor. Please go ahead.
Hello, sir.
Yeah, Vinod.
Yeah, firstly, congratulations, sir, for your result.
Thank you very much. Thanks.
Sir, my question is, our trade receivable is tripling from 22 to 25. So is this risk in rising bad debts or cash flow disruption?
Sorry, come again, please.
Sir, our trade receivable is tripling from 23 to 25. So is there any risk in rising bad debts or cash flow disruption?
No, there are no bad debts as such. We are, again, like I said, I just want to reiterate that the companies which we are working with are extremely honorable, established, powerful, and I mean, in the sense, they are of repute. So we do a lot of diligence when we start the work with any company, and therefore, and we are quite diligent in getting our payments also. So receivables is not a question mark. It could get a little delayed by, couple of days here or there because of various reasons. But otherwise, I don't find any risk in any of these stuff, receivables. And if you see the backdrop, there are hardly any bad debts during the last couple of years.
Yes, sir. So, sir, my next question is, what is our working capital days and our peers, as compared to our peers?
See, I am not somebody who's really interested to be at the moment with our peers, because our peers are very different. Thermax being, if I take, there are companies who have multiple divisions, so like Thermax, Ion Exchange, or, the other companies. And there are companies who are single-owned companies, so I have really not gone into it. But sometimes because even when I try to do some peer comparison, I found that there are so many companies attributed as competitors, but actually not into the same business. So it's difficult to ascertain, but I think we are very much in line with with our requirements, and we have, if you see our ROE or ROC, whatever we have been doing earlier also has been quite well managed, and we want to maintain a healthy, ratios to that. Though at the moment, because of the sudden influx, it could be a little on the lower side, but definitely we will be improving it. And that would be more evident by the end of this fiscal year.
Yes, sir. Okay. Thank you, sir.
Thank you.
Yeah, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Rajdeep for closing comments.
Thank you everyone for joining the conference call of Apex Ecotech Limited. If you have any further queries, please feel free to write us at info@akmiladvisors.com. Once again, thank you so much for joining the call.
Thank you very much. I just hope I have been able to give responses and answers to everybody to their satisfaction. Like Rajdeep said, if there's any other further query, I would request you to kindly forward your queries to the mentioned mail, and then we can take it forward. Thanks very much.
Thank you so much.
Thank you.
Thank you. On behalf of AKMIL Strategic Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.